Hi everyone. The world watched as President Donald Trump announced a sweeping 26% tariff on all Indian imports to the United States effective immediately. This sent shockwaves through multiple industries in India, threatening livelihoods, business models, and economic growth. Today, we analyze the impact of these tariffs on five major Indian industries: seafood, IT, pharmaceuticals, automotives, and agriculture, and what it means for the future of Indian trade. India's seafood industry is worth over $5 billion annually, with 60% of it coming from shrimp exports directed towards the US. But with the 26% tariff, American buyers will now switch suppliers to countries like Ecuador, where there are much lower tariffs. Experts predict Indian shrimp exports could drop by up to 25% this year alone, costing the industry over $1 billion. Fishermen across Kerala and Andhra Pradesh are already feeling the squeeze. The seafood sector supports over 1.5 million fishermen directly and millions more indirectly. If the tariff persists, nearly 20% of these fishermen could lose their jobs. Despite this, India is fighting back. Exporters have already aggressively targeted Europe, China, and the Middle East. The exports to Europe are already seeing a 15% projected rise, while India is going to focus as well on China, where the projected increase will be about 20%. But can this diversification cushion the loss of revenue from the US market? India's IT sector, valued at over 283 billion, relies heavily on the US for over 50% of its revenue. While services aren't directly taxed, the 26% tariff is creating ripple effects that are impossible to ignore. Clients in sectors like manufacturing, logistics, and retail are expected to cut IT budgets by up to 20% focused towards India, which will lead to project delays and revenue losses. The Nifty IT index has already dropped by 4.2% and now today has also dropped by about 10% overall. Its worst market performance in 2 years. Analysts predict that up to 100,000 jobs could be at risk this year if US clients continue reducing budgets. Companies like Infosys and TCS are demystifying this and trying to diversify their expanse towards Europe, Australia, and the Middle East. But with contracts focused more towards US, this is a big risk. However, some of these companies have focused more towards Europe, which will be growing at 15% this year. Will it be enough? I'm not too sure. But we have to understand how to diversify our markets as well. India's pharmaceutical industry, worth over $50 billion, is also feeling the heat. The US remains India's largest export market, valued at approximately $7 billion annually. With the 26% tariff, American buyers are demanding price cuts, pressuring Indian companies to reduce their profit margins and absorb some of these tariffs. What is worse is that generic drug exports, which account for over 40% of the US market, are at serious risk. Analyst warns that revenue could decline in this by about 15% this year. Global healthcare could also suffer. Reduced exports from India could increase US drug prices by up to 30% for critical medicines. With over 60% of generics used in the US coming from India, this is more than just a trade war. It's also a health crisis and an inflationary pressure on the global as well as the US economy. India's automotive industry, which is valued at $118 billion, is now hit hard by Trump's 26% tariffs as well. The US is a major market for Indian auto parts, contributing over $1.5 billion annually. The impact on electric vehicles is more severe. India's EV market, projected to grow at 36% annually, now faces high export costs. Experts predicted the tariff could cut EV export revenue by 20% this year. Auto part manufacturers are also facing a potential loss of $1 billion in revenue by the end of this year. With competitors emerging in other markets, it will be very hard for Indian companies to compete globally. Thus, the Indian companies have to innovate fast or risk being left out. India's agricultural exports to the US are worth over $5 billion annually. But with the new 26% tariff, these exports are becoming increasingly unviable. Indian farmers are already experiencing price drops of up to 15% due to the reduced demand. For cotton alone, exports to the US could decline by 30% this year. Farmers in regions like Maharashtra and Gujarat are seeing profits diminish as competitors from other countries take advantage of this situation due to less warehousing facilities, logistics, and advanced infrastructure. The agricultural export industry would be severely damaged due to this. However, India is trying to pivot. The shipments to Europe and to other countries like in Africa have actually increased by 12 and 18% respectively this year. But can this diversification make up for the revenue lost from the US market because of the huge demand that was already there? In conclusion, the 26% tariff imposed by the US has undoubtedly hit India hard. From the capital markets to the industries, it is quite visible that the impact is going to be huge. The shrimp exports, the pharmaceuticals, the IT industry, the auto parts, as well as agricultural exports, they are all going to be impacted severely. But India's strength lies in its resilience and innovation. By diversifying the markets, investing in artificial intelligence, robotics, which will ensure efficiency and effectiveness of these industries, it will help India build a stronger trade relationship with other countries on a country by country basis, including countries in Europe, China, as well as Middle East. India is proving that it can adapt, but it needs to adapt fast. The road ahead is very challenging, but with the right strategies, India's industries will not only survive but thrive. This is Ruskin Felix. Follow us and subscribe us for more and share with someone who may need to know this. Thank you.